Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at a trade setup that did not unfold as anticipated yesterday on the USE minis. I think it's important that vendors show losing trades, and I don't think enough vendors do this. It's important because losses can and will and do happen. So it's important to show the bad, the good, or the good, the bad, and the ugly in any trading approach to the markets. But as usual, let's start with our risk disclaimer and remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken. They're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly accept that losses can and will and do happen. And this is going to be the focus of today's video. So let's have a look at the ES as it unfolded yesterday, which was the 9th of May. And in particular, I want to look at this history triangle here. Can you see there was a history triangle? So what we can do here is if we right mouse click over the red cell bar, do analysis, you can see we can place the analysis on at the time, and you can see this would have been a losing trade. In other words, you'd have been taken in short, stopped out for a losing trade. So I want to have a closer look at this and show how this at the time would have been a potentially good trade. I just want to show you how you can use our trading mode to go through this as well. First and foremost, let's go to the higher time frame chart. Remember, we look for support and resistance on our higher time frame DPs to then gauge the large degree trend. If you're using a 3-minute chart, as I'm looking at here, you'd go out to the 15-minute. If you're using daily charts, you go to the weekly. Say 15-minute Forex, you go to the hourly. So I want to go back and use training mode until just after the open yesterday. Sorry about this, I've got a bit of a cough at the moment. And show you how you would have placed a DP on the chart. For those of you who have been following us for a while will know that we initially used the DP from the last swing into the high or low. So here we had a low on the 15-minute chart. This is the last swing down. So you had a right mouse click over this pivot high, down decision point, and can you see how the market went up into this high early in the trading day yesterday? Let's step forward. And as you can see, the market looked to be making meaningful resistance at this level and looked like it was starting to come down. So at the time, and this is the important point, not with the benefit of hindsight, but at the time it looked like a high was coming in and the market was potentially going down. If I turn trading mode off, obviously you can see the market had different ideas and went back through it. So let's see how this would have looked on your 3-minute chart. In particular, how it would have looked when we go back to the potential trade setup there. So this is what it would have looked at the time. And this is where training mode is very handy, because you can go back and view your analysis at the time without the benefit of seeing what the market has done. So if we look at this, this looks to be an ideal setup where we had the market coming off higher time frame resistance. There it is, there's our 15-minute resistance. The market moved down. We then had an ABC correction up. If I right mouse click here and place the analysis on, you can see this was a potential W3 or wave 3 trade, with the target being short down here into the typical wave 3 WPT. We use correct position sizing to keep our initial risk small and under control, in this case shorting 3 contracts for a risk of less than 2% on a $20,000 account. If I move forward, you can see it went sideways a bit and then would have clipped you into a short trade. So at this particular point you would have actually been short. So let's see how the market unfolded. So we go forward, it went sideways, didn't really go anywhere, started to drift up, and then at that point there you would have actually been stopped out. If I go forward another bar, you can see you would have definitely been stopped out. So the point being is that this was actually a losing trade. This would have been a trade that would have actually given you a 1-hour loss. At the time it looked to be a very good setup, but the market does not always give you profitable trades, and this is why I wanted to go through this today and actually have a bit more of a detailed look at how it looked at the time, and to show you that even though it looked to be a great setup, losses can and will and do unfold. So this is important, that every trading approach from every vendor will always have losing trades, and I think it's important that vendors show this. If I go forward, you can see we did actually have a VS sell set up there. So if I go forward, or if I place the analysis on there and I go forward another bar, you can see that it went through and carried on up. So in other words, this particular setup was not a valid setup. That's why it was not kept on the chart, because it didn't go through the sell setup before being validated, going through the stop target. So just to show you that if you were worried on why there was a potential VS setup there that basically was removed from the chart, it was because it was not a actionable trade and would not have entered you into an actual trade. So just wanted to cover that. Right, if we now zoom out, you can see there was actually a TS3 buy set up a bit later in the day that was on a blue MTP trend. So if you were entering this at the end of the day, you may well have come out with maybe a plus 1 hour profit that would have made up for the 1 hour loss earlier. But you may not have done, because that was close towards the end of the day. And also, if I go out to the 15-minute chart and I zoom out even further and place the DP on from that pivot, you can see that you may well have been coming into the next area of DP resistance. So you may well have not taken that trade. So it may well have been a losing day yesterday, with the only trade you would have been taking would have been this potential W3 short trade here that would have ended up in a loss. So I think it's important that vendors show losing trades. And I just wanted to do this video today to show you that even though you have good trades with MTPredictor, that sometimes you can actually end up with a losing day. So this would have been a minus 1 hour loss that probably wouldn't have been recouped, and you'd ended up with a losing trade. Losses can and will and do happen, and it's important to show them. But the trick is keeping these losses small. As we've seen here, position sizing kept this loss at minus 1 hour or 1 risk unit. We're hoping then that over time we have more trades than not that actually have larger profits than this, much larger. So that's what should make money over time. So the trick is having your profits large and keeping your losses small, but not avoiding the losses. There always will be losing trades, and that's what I wanted to show in today's video.